In this kind of environment where monetary policy is supporting nominal GDP, companies having assets on ground do very, very well. And Japan has most companies who have assets on ground. It was a very simple view of investing in Japan. So I think for HNIs it is worth doing. But when we look at how an average investor is invested in India, I strongly believe that an average investor who's invested in India, who's not kind of HNI, ultra HNI, who doesn't want to send its kids abroad to study and they create a life over there is no need to do it.
Hello everyone, welcome to the latest episode of your favorite podcast on the personal finance side, Money Confessions. We have had a great set of speakers like Nitin Kamath, Nilesh Shah, Naren, Deepak Shenoy, and today we've got someone who matches all of these guys equally or even more. Mr. Ritesh Jain, who was very well known as the fund manager heading the fixed income desk at Kotak and the CIO at Canara Bank Mutual Fund. Someone who is now doing a lot of work on the macro side, on the global investing side, and one of the few managers who has an extremely good hand about predicting global macro trends, and personally someone whom I have looked upon to look at a lot of fixed income trends that have emerged in India. And so without further ado, welcome Ritesh to this podcast, and thanks a lot for sparing your time despite being miles away from us.
Thanks, Vivek.
Thank you.
Happy to be here.
Yeah, thanks Ritesh. So I'll just, without spending much time on the nitty-gritties, could you just help most of us understand more of your background, because you've been someone who has really seen it all. Within India, you've been with Kotak, you've been with Canara Bank. I think you've been an advisor to Allbridge. You've been an advisor to many other PMSs funds. So I guess a lot of people look up to you for advice, and that's a great thing. So what I want to know is, how did this whole investing journey come to be? Like, what is that made you move from your whatever you did earlier into this investing field?
So, first of all, people might not be knowing that, but I started my career on the FX trading side, foreign exchange trading side. And I used to do foreign exchange, interbank, foreign exchange, cross currencies, derivatives. That is where I started with a bank. Then I moved on to a bond desk in the bank. And that is, I think, where I found my calling. This is the best asset, where I said that this is the asset that I would love to be a part of this thing. And if you want to be a bond investor, you need to understand macro. So maybe I'll come directly to my investment philosophy and learnings, because people would not want to know more beyond that. So I was a bond investor for first 12 years of my career. And it is there I fell in love with macro investing. After that, I became chief investment officer at the age of 35. And then unfortunately, I became people's manager and stopped being a fund manager. I tried bringing together my fixed income and equity fund managers together, but it was difficult. They used to think completely different. So coming back to investment philosophy, because that is what everybody would want to know, it is simple. It is just following liquidity. Liquidity, like water flows, follows the path of least resistance. So when you read for an average of 5 hours every day, and sometimes even more, you are able to connect the dots. So I strongly believe that once I left, my working for a large institution and started something of my own, my productivity has gone up because I have time to read and not time to spend on meetings. Okay. So coming back to, so I look at liquidity. I read for 5-6 hours, possibly every day, even on weekends. This allows you to connect the dots. and the connecting of dots lead to an investment positions through an ETF. Think of me as the guy who focuses on PE multiples rather than EPS. I can't provide any edge by forecasting EPS, which hundreds of analysts are already focused on. What nobody is focused on is price earning multiple, whether the PE will expand or contract, and I focus only on that. And having a view on liquidity helps me with that. And if you want to know some learnings around what has been the learnings investment journey, do you want to continue with that thing or you want to have a different? I can't hear you. I can't hear you.
Mute. Yeah. So Ritesh, I think this is an extremely important point that you made about liquidity, because I myself have seen it. So what's the aha moment that you had in your life where you realized this concept that liquidity is king and everything else is secondary? Any examples from your life that you can share with?
Yeah, I will do that thing. It has mostly happened in the last 3-4 years during my investments, and it's a very simple example. But before that, let me tell you that every asset, and this is the biggest learning actually I had. I've learned along the way that every asset needs a catalyst and a missionary. Please understand. Take it very interestingly actually. Catalyst is easy, like what will change in the company, what will change in an asset. It's a very simple thing which everybody looks for. What people miss out is, where is the missionary? What is the missionary? So a lot of investment teams and good companies never give you good returns because they lack a missionary. What is a missionary actually? And Ben Hunt has written extensively about a missionary. A missionary is a celebrity investor which endorses that asset. So there are times when you wait and there is no missionary. And so one more learning I had, or problem I have, is that I don't know when to sell. Buying is easy, very easy. Selling is difficult, really difficult, because you fall in love with the performing asset classes. Now coming back to the real life examples which you've asked me, I will give you 3 examples. One is uranium miners, one is Japan, one is Turkey. Now I've been holding uranium miners for last couple of years in PineTree Macro portfolio. But everybody started learning about uranium in the last 6-9 months. What did I see 2 years back? 2 years back, I could see the nuclear renaissance. 2 years back, I could see that all the sins of Fukushima disaster has been washed off. 2 years back, I could see an industry where supply was completely collapsing, but demand had started to come back. Only thing was, it was all about timing. How would you time that asset? That's a very difficult thing. And then you started seeing that maybe nuclear energy is getting back into green and clean energy. We want to move away from fossil fuels. I don't understand solar and wind, but I do understand nuclear energy. And how do you play nuclear energy? You play it through uranium. Uranium, U3O8 price, was at lowest price of 15 years. The supply companies completely collapsing because they need $60 for break-even price. So you could buy an asset where the tailwind was there. What was missing was a missionary. Over the last 1 year, we've got so many missionaries now for uranium. Second thing was about Japan. Japan is the only country in G7 which is running orthodox monetary policy. It is getting inflation for the first time, and it is allowing the inflation to run hot, very hot. It is trying for nominal GDP. Nominal GDP is real GDP plus inflation. In this kind of environment, where monetary policy is supporting nominal GDP, companies having assets on ground do very, very well. And Japan has most companies who have assets on ground. It was a very simple view of investing in Japan, but I also knew that if you are going for nominal GDP, then your currency will actually depreciate. So there is there's only one ETF in the world, which actually hedges the currency risk on an everyday basis if you invest in Japan. So we invested in Japan, had a view on Japan, also had a view on currency, so bypassed the currency weakness, and that ETF has given 40% return in the last 1 year. What helped Japan was again a missionary. That missionary was Warren Buffett when he started buying those assets, right? So I can give you one more example of Turkey. Turkey is a recent example. Turkey, about 70-80% inflation, bad monetary policy. But then I saw one news on a particular day where Turkey was allowing Sweden to become a part of NATO. What is so great about this news, and why should you invest in Turkey based on that? Because Turkey was negotiating with IMF for huge line of credit, and we all know liquidity can postpone your every problems in life. It might not solve, but liquidity can postpone every problem in life. So I think the deal behind that was that Turkey will allow Sweden to become a part of NATO, and US will green light a $13 billion or $15 billion to Turkey to wash away all its sins. So when I saw that news that Sweden will become a part of NATO and Turkey has no objection to it, I just bought Turkish ETF for our investors. The ETF is up 30% at the time when the market is actually down. So these are three simple examples of how liquidity worked in your favor. It was very simple actually, kind of things.
Right. One more thing which I wanted to digress and ask you out of the syllabus is Sri Lanka. I mean, when the whole LTT problem was solved, I think the Sri Lankan bonds had moved up. And then was it a flash in the pan? And why did that flatter to deceive?
The thing is, you cannot go to ultra small caps. Sri Lanka, Pakistan, Vietnam, they are just two small countries, okay, with macros which actually moves very very fast. So you don't have ETF for some of them, and even if you have ETF for some of them, they are very very illiquid. So there is no point getting into those kind of assets. I even like Bangladesh. I like Morocco today. I really like Morocco today, what is happening in Morocco. But there is no Morocco ETF. So you stay away from those assets which are very, very small in nature and which are very illiquid. Because if you cannot make them a big part of your portfolio, you're just wasting your time.
Sure. And do you think this same analogy applies to listed equities also, like ultra small caps or micro caps, stocks in India which are less than 100 crores of market cap?
So yes, you are right about that, and that is why most of them will never make you money. Some of them will make you money, but most of them will never make you money. So you stay away from those things which are very very which are not having those kind of which are not in the eyes of the regulator, which are very illiquid. So it is very easy to manipulate them. Although I believe that SEBI is doing a lot of work over there, which is taking away the froth from a lot of these stocks. But I will apply the same analogy.
Sure, sure. And since have the privilege of having someone like you on the macro side, and at Goalteller we have also started suggesting Japan as a geography. There's only one single fund, Nippon Japan ETF. But the problem is that today, with the latest budget, the international funds have a very, very inefficient taxation at the slab rate. So anyone with a high income segment, for them, the delta is at least 20-30% in terms of returns, higher returns of 20-30% on the base return. So do you think, as a fund manager, for speaking someone, if you were to speak on behalf of an individual investor in India, do you think a geographical allocation to something like a Japan or any of these asset classes is worth doing despite the inefficient taxation that we have right now?
So I think for HNIs it is worth doing. But when we look at how an average investor is invested in India, I strongly believe that an average investor who's invested in India, who's not kind of HNI, ultra HNI, who doesn't want to send its kids abroad to study and they create a life over there is no need to do it. India is not Brazil. Brazil is one trick pony, exports,
commodities driven. Yeah.
Okay, Argentina is commodities. India is not like that. India is a very well diversified economy like US. Yes, do not have uranium, silver miners, gold miners. I can talk about many more themes. But I strongly feel that for an average investor, India provides, okay, a kind of diversification across sectors which is not available in a lot of
Anyway.
countries, domestic investors.
That's a great point, so मैं आपसे एक और चीज़ पूछना चाहता हूँ कि you I meet a lot of people who've shifted from India to the US or basically the West, and they typically have a lot of crib about India कि नहीं अभी तो मैं यहाँ हूँ, वो इंडिया ऐसा है वैसा है, और आपके साइड से इज़ वेरी डिफरेंट. So once you have had a very very illustrious career in India, and now you were managing US, I think international investments and international investors. What is that in India like? What do you feel now, having a different perspective about India? Anything which you would like to say here?
Yes. I think post COVID changed the world. And if you would have read, I am I'm actually fond of writing. EMs have become DMs and DMs have become EMs. Okay. And the reason is post COVID, developed world took a lot of debt and they don't have anything to show for the debt. So their debt to GDP has gone up much more than India. Okay. Their nominal GDP growth rate is much less than India. And the inflation differentials between India and developed world has narrowed down dramatically. All these three things tells me one thing. Indian currency, forget next 6-12 months, will not depreciate against G7 countries, most G7 countries for rest of the decade. If
Wow,
I
that's
were to
that's
take that thing into account, okay, it changes the landscape completely different for NRIs. Actually, India today is a much better investment destination for NRIs than for Indian investors investing in India.
Yeah, that's a very big statement to make, and I think not in the podcast, but Nitin Kamath also said a lot of. If I was to give one suggestion to my kids or to anyone today, that be in India, don't leave India right now for the next 10-15 years.
So I'm launching, since we are on this topic, I'm launching within next 1 month and a new company, nrizen.com, where
That's
investment solutions for NRIs.
Oh, brilliant.
And there is one more thing. Historically, NRIs have invested in Indian real estate, right? And it was a right decision. Currency used to depreciate. Anytime your currency will depreciate, real assets will do well. So they used to do well because currency used to depreciate. If the currency were not to depreciate, if INR were not to depreciate, like CADI INR is at 60 for last 5 years, it is not depreciated. Then that money will move from real assets to financial assets. So incrementally, I believe a huge amount of flow will be headed to Indian equities, bonds also you can say, from NRIs.
Yeah, which I think will happen domestically also, because there are two big structural things that have happened in India. One is the taxation on debt funds. So a lot of HNIs, which are a large pool of assets, for them, the risk premium on equities, that's the differential has gone up. Debt is now 5.5, 6%. Equity is at 11-12%, which was earlier 8 and 12. And second thing is the uh, new tax regime, where you don't have to invest into small saving schemes. So that's these two are big triggers which the government itself is doing to push people into equities. So I think that I agree with you completely on. Ritesh, I think thanks for these very radical views. I mean, most of the times when we meet fund managers, etc., they try to toe a very very safe line of view, and it's very refreshing to see someone like you coming and speaking their minds out. So, sticking on speaking your mind out, what do you think globally the next decade will hold, or this decade will hold in terms of trends, financial trends, technology trends, and few things that we at Goalteller keep getting encountered with in terms of questions from individual investors, both retail and HNIs, is that shall we geographically spread assets, which I think you answered already. Shall we invest into things like gold and silver, because with all the geopolitical concerns that are happening, are these assets that will do well? Do we invest into other currencies? I mean, which is not really through equities, but let's say bonds of other countries. Because if something were to happen in India, we should have exposure to other currencies in the globe. And how protected is my current equity investments, because the pace of technology disruption is so high. Today, if I invest into a company, after 2 years, I might see that being obsolete completely. So, how do you advise a normal investor to navigate so much of complexity and invest?
Vivek, I will answer this thing in two parts. First, I will give you my view on global markets, and then I will tell you what is happening in financial markets. That is the easiest way of, so once you keep global market out, and then you say what is happening in financial markets, what are the trends. Okay. So only one thing will decide the fate of all assets in short term, because people want to know about short term, and that is oil and not Fed policy. I wrote it extensively on that for the last few months. Years of and India, as you know, gets very big impacted by oil. But let's go back to the global thing. Years of underinvestment in oil and gas capex could lead to spike in oil price, which can make this stagnation and stagflation more permanent feature of global economy. More so those economies which are indebted like G7, India is not in that league. Also, shape of yield curve is telling me that we are headed for a recession. I do not know whether it is a mild or whether it's a strong recession. But since you have presidential elections in 2024, you might not get a strong recession in first half of 2024, and which could affect the performance of equity markets. So this is your near-term view. Today, the markets are kept glued together only by Magnificent Seven. There are just 7 stocks which are keeping the market glued, and outside of them, there is absolutely a lot of carnage in other indices. So maybe this is the last bastion holding on to the market. So I'm cautious broadly on equities, neutral on bonds, because bonds have got hit very badly. Can the yields go up? Yes, it can go up if oil prices goes up. And I'm positive on select sectors because I look at trends which are seeing huge government subsidy to bring back supply chains, and also in energy transition. Some of the companies which are putting all-time new highs, whether in India or in US, are in energy transition. And by energy transition, I do not mean solar and wind. Go beyond that. Go to grids, go to electricity. Anything to do with electricity, infrastructure, ecosystem is doing very, very well. So don't look at broad markets. Money will not be made in broad markets. Now let me give you some trends on the financial markets. And it's a very simple thought process which I have. There is no complexity required. Low inflation due to shale revolution, which allowed US shale production to rise from 5 million barrels to 13 million barrels from 2013 to 2021, led to money moving from real economy to financial assets and helping careers of people like me also, and creating a real estate boom in metros, because services are metros. In India, in metros, globally also, services guys, the guys who were in services, the white collar workers did fantastically well. That was your past. We never drive a car looking at rear view mirror. So we should not be extending those arguments. What has happened in the past will continue in future. High inflation, this is my view, high inflation and deglobalization will lead to money moving out of financial assets to real economy, boosting job creation and salary growth in manufacturing sector, creating a real estate boom in India in tier 2, tier 3 cities, where we will also see emergence of new entrepreneur millionaires. It's a very simple thought process.
Okay, great. Now, I'll pick your brains on one more thing about fixed income in India. Now, the Indian markets, I think the Indian 10-year and the US 10-year, the yields have never been
Yes.
as low, I think, in history. I don't know, maybe you can correct me if I'm wrong, but what do you think will happen? Whether, I think at some point of time, maybe US will come down, India will go up, and do you think reversion to mean here will happen by a combination of both these factors, that India will go up and US will come down, or do you have a different view here?
So I have a different view. So let me first give you what has happened in the past. The median difference between the Indian and US 10-year has been 350 basis point. Currently it is 260 basis point. I will not be surprised if it narrows further in coming years as Indian inflation and US inflation converges. Like earlier it used to be 2% for US and 6-7% for India. The new normal in my view will be 3 to 4% for US, 5 to 6% for inflation for India. This coupled with Indian projected nominal GDP of 3 times that of US with much lower debt to GDP for India as compared to US makes me confident about this call that this is not an anomaly. We will see narrowing difference between US and Indian 10-year. I will reiterate that the only risk I see on horizon is sharp rise in oil price because US is self-sufficient in oil. India imports 90% of its oil consumption.
But as you said earlier, will shale always be like a barrier to this?
No.
Or no?
Shale actually production should be topping off at any given point of time because as you know these are not those wells which you can drill for which can give you returns for 50-60 years like Gawar oil field which is continuing. 1955 we found out Gawar oil field in Saudi Arabia, it is still continuing. Shale wells have very short life. So you are absolutely right. I'm waiting for the data, but I strongly believe that US shale production could be topping off. If US shale production could be topping off, then that means that higher oil prices are here to stay.
Wow, okay. That's a very interesting analogy. And Ritesh, one more thing from a very retail, for me also, which we keep hearing, and I find it very funny, is this whole US debt ceiling that we hear. That kal US debt ceiling ka exhaustion ho jayega, and then at the last day someone comes and they extend the ceiling. So what do you think is the end game here? That the US or economies which have such high levels of debt have? Do you think at some point of time in future it will blow off, or do you think it's too far for us to worry about it? Because a lot of people ask this question that the debt ratios are so skewed. At some point of time in future, you will see a complete blow off.
So it's a very simple answer. Since 1800, there have been 52 cases of countries having debt to GDP, 130% debt to GDP. Since 1800, 52 countries have seen that thing. 51 out of 52 those countries defaulted on their debt by outright default or by inflating away the debt. US touched 130% debt to GDP last year. The last time US touched 130% debt to GDP was in 1944 when US was coming out of World War II. Over the next 7 years, they reindustrialized their economy like they were doing now. So 1944 they were coming out of World War II. 2021 they are coming out of COVID. 1944-45 they started reindustrialization. 2021-22 reindustrialization. They kept their interest rate lower than the inflation for 6-7 years. By 1952 they inflated away the debt and their debt to GDP came down to 70%. I strongly believe this is what will happen. That US will slowly by next year give a new target of inflation of, accept a new target of inflation of between 3 to 4%.
And what will be the repercussions of this globally, and especially for Indian investors? What do you think they should be investing into?
Buy asset owners, fixed assets on the ground. Inflation inflates away the debt. It's a very simple. Higher inflation, you need fixed asset owners. Lower inflation.
So no bonds, only equities.
It was during those 7-8 years, bonds were the certificate of confiscation in US. I'm not saying about India. Look, India does not have that kind of debt. But if you were to ask me about US, Canada, UK, possibly Germany and France, yes, they will inflate away their debt. The other choice, let me give you the other alternative. There is a choice. We always have a choice. The other choice is you don't inflate away the debt. You try to mend the economy properly, raising the rates. Asset values goes down. And within 12 months, you have bread lines with more than 10% unemployment. What will the government choose?
Especially
You know
in
what will they
political,
choose?
yeah. Sure. And I think India also will. So, what's the rub off on India rather than me saying this? I mean, so, we've always heard this, thing that, we will be alienated from the global economy, from the US markets. Do you think that time has finally come with the kind of domestic money that India is seeing right now, or do you think that is still just a flash in the pan right now? Because we have seen a lot of FIs outflows last 1 month, but domestic inflows are so strong. We spoke earlier in this podcast about why inflows will continue to be very high. Do you think India's time about shrugging off foreign investor flows has finally come, or it's just a fad that we feel?
So forget next 3 6 months. Forget next 3 6 months. Okay. If I can invoice my oil in UAE dirham, okay, my imports in oil from Russia in UAE dirham, or if Saudi Arabia puts $50 billion to put strategic petroleum reserves in India, we give them rupee and they are allowed to invest that rupee back into Indian economy, Indian businesses, Indian greenfield projects, then India is completely alienated from the rest of the world. It will not matter to us.
And the same point, do you think de-dollarization, which has been spoken about a lot, but now again that narrative is there with the BRICS economies thinking of a separate currency. Do you think there is any merit in this discussion about people moving away from the US dollar as a reserve currency anytime in the next 10, 20 years?
So it's a responsibility of reserve currency to share its GDP. It's a responsibility of the reserve currency to police the world. Okay? US did it for years, kept the world stable also. But the domestic policies are saying that bring back the jobs. Unionization is going up. People want to vote for the politician who will bring back the jobs. US is saying, I'm tired now. I don't want to share my GDP anymore. I want my supply chains back. I don't want to police the world. They themselves are saying they want to de-dollarize.
मैं अपने घर का पहले सोचूंगा, फिर बाहर का गांव का सोचूंगा.
जब तुम गांव का सोचते हो, जब बोलते हो ना, जब गांव का सोचते हो, okay, then सरपंच होता है, class monitor होता है, okay, he keeps everybody in line. US is saying I'm tired. I don't want to be a class. I don't want to fight all these wars because I will lose the election. My electorates don't want me to fight these wars. Have you seen what is happening around us? Okay. So they want to reindustrialize before world loses its interest in US dollar.
Okay. So you're saying that there
And
is.
a new world where class का monitor बोलता है यार मैं जा रहा हूँ. Everybody wants to be the monitor in the class.
Okay. So Ritesh, इसमें मैं आपसे पूछना चाहता हूँ about your the PineTree philosophy. Like, who are your investors? What kind of investments you do? Who are the people who are the minimum investments that you seek? It's only family offices. What's that you? What are you doing right now? Your performance has been exceptionally well over the last couple of years because of your calls on uranium, Japan, etc. I believe you also have a very strong view on precious metals.
Yeah,
Could
gold
you
is my top holding.
Yeah, huh. So could you give, that's something which we also have been recommending a lot, though we are not brave enough to make it a top holding. But yeah, we've been recommending people to at least move up between 5 and 10% of their holdings on gold. But could you give a brief on PineTree and who are the people who can invest into this, and how's it been at PineTree, your own journey over the last whatever number of years you have been helping this?
Yeah, so basically PineTree has now completed 1 year on August 31st, and I wrote about it, what we did over the last 1 year, what calls we took, why we took the call, and what was the outcome. So you can read the document on PineTree website. I spent a lot of time writing that. So I started PineTree exactly because I think macro investing works, and it is easier than stock picking. Also, if anybody can combine both macro and micro, the results are mind-boggling. I do that for my personal investments in India. So PineTree is an asset allocation product for resident Indians who wants to diversify and invest globally. The minimum amount which we can accept over here as per regulators is $100,000, 100,000 USD. It is a macro-oriented product which primarily invests only through ETF. US has 2,000 listed ETFs. So having any macro view can be expressed, through investing in that particular thematic ETF. It's very simple.
So you're saying through the so what's the pool of your investors right now? Are they resident Indians?
Resident Indians who wants to diversify. The thing is, since the minimum investment is $100,000, it has to be an HNI.
And this is all through the LRS route. What's the procedure for doing
and now
this?
the problem in the new LRS routes where you have that 20% TDS kind of
TCS, which is there.
TCS.
Yes. So
But
you feel that the TCS, the performance will be enough to compensate for all these small challenges about TCS and
look, it will. There is no doubt in my mind. But for the time being, people don't want to pay that 20%. If you ask anybody, a normal person, they would not want to get into that thing. So what will happen? And secondly, I have to be on ground present over there, meeting people. Look, unlike anybody else, HNI's family offices, they want to see your face. Since COVID is over, and Indians love to do that thing. And I would prefer also to sit in front of somebody, explain it. That is a much easier way. So maybe I'll be coming in November, December, meeting people. But we wanted to stabilize. We wanted to bring performance. I have always seen, and Uday Kotak has told me in my first job, if you have performance, money will come.
Yeah, very, very well said. And the other thing on the same topic, what is the allocation? Let's say if you were to decide someone's allocation in your fund, an HNI, out of 100%, what's the amount would you suggest them to put it into PineTree?
5%? Not more than that?
5%.
Yeah.
And what's the time horizon that you would expect this individual to have?
3 years. 3 years is the normal time you require, even from the taxation purposes also.
But is that it? I mean, do you think 3 years is good enough, not more?
Yes. I'm saying minimum 3 years, but 3 years is good enough for me to perform on any money.
Okay, but some of your macro calls, you feel, let's say, precious metals itself.
It takes time.
Don't you think we'll need more time?
No. It takes, everything comes. And plus, individual asset is never about 10%. From a risk management, I learned my risk management lessons very early in life. You might be ultra bullish on any asset. You believe it is going 10x. You will still not do, asset allocation does not allow me to do more than 10% in a single asset.
Yeah, that's very well said. I mean, coming from you, I think this should be a great learning for all our listeners, because we see people who have invested 20-30% of their assets in crypto and God knows what, and you will not believe it. We've had Twitter Spaces, of course. We will be happy to have you as a guest soon on that. Is in the last 2 weeks we've had like 40 to 50% of our subscribers coming to us and telling us that we want to shift two things. One is we want to move our risk profile from moderate or moderately aggressive to aggressive, and secondly we want to move from large caps to small caps, because we have a long term time horizon. 10 साल का है, तो why are you making me invest into large caps? So
that always happens towards the end of the cycle, you know that.
So that's a very worrying sign. In fact, so that's one thing. And the second thing which I wanted to ask is, what's your view on domestic gold? Because your view on the currency is slightly different. So you think the rupee, the gold, the INR gold prices will do very well despite the concerns on the USD, etc., that you've got, that the gold will not get the benefit of any currency movement?
Yeah, that's a good question. From 2000 till 2023 September, average return in gold in INR is 12%. Average return, annual return. Okay. And 4% of that return, 3 to 4% of that return has come because of currency. Right? Going forward, I believe, forget the next 6 months because US is still in the tightening cycle. Okay, forget next 6 months. Beyond that thing, Indian investors will not be getting a benefit of INR depreciation anymore because I believe INR will not depreciate. Their return will be a return of what will be the gold return in USD terms. Because INR USD, in my view, will not depreciate beyond next 6 months. So you have to temper your expectation, and as it is, if currency does not depreciate, there are better investments opportunity.
So, do you think, sorry to put words in your mouth, but does this also mean that a lot of the export driven industries like tech, etc., will be in will not have a very great time over the next few years?
Yes, you have to depend upon productivity for returns.
Yeah, so only the top line will matter, not the currency that they have been enjoyed for a while now.
Absolutely. Forget just give it 6 months to stabilize. More and more people see will see that thing, and you as it is having the JP Morgan thing also coming in
Yep.
EMBI index. Okay, let the US tightening get over. Okay, let this macro whatever uncertainty which we are seeing let get over, and you will start seeing that the currency does not depreciate. What will you do? And if in a new multipolar world we don't have to pay USD for our oil imports, and if Apple goes from $7 billion of production of electronics, to $40 billion, which they have themselves said in next 3 to 4 years, I am doing import substitution. Real
Fair
works.
enough.
A lot of things will change. A 12% nominal GDP in today's world, which India will be having, is mind-boggling for any global investor.
Yeah, so the last year, I think you would have seen the nominal GDP and the real GDP differential was very low in India.
A six
That was
percent real plus 6% nominal, 6% inflation is a fantastic GDP in my view.
okay. And now, Ritesh, coming to if you would be okay to share some of your personal, like, glory points, like what you feel very happy about, close to your heart, and for a few cases where you've received a lot of bouquets in terms of individuals coming to you and really thanking you, or you've got a lot of accolades for certain calls and certain things that you've been very unhappy about. Anything which you want to speak about?
Nothing comes to my mind. I just forget everything about that thing. But there is one thing which I saw 5 years back. I said there is the democratization of information has to happen, and people need to get the right point of view. Okay, till the time you are working for an institution, it doesn't allow you. You have to be politically right because you're representing an institution. You're not yourself. Once I left, I found that I can write my thought process. Okay, without thinking about keeping politics aside, only on economics, and it leads to a lot of people coming back to me and telling me that they are able to understand much better.
Yeah, I can see that. I think you were the only. I mean, making a view of the fact that the Indian rupee will not depreciate is, I mean, extremely appreciative. I mean, this is very interesting. uh,
Yeah, so you cannot put some of these in the public domain if you are working for an institution, and I do not, you have to maintain the integrity.
I understand. You got to maintain a middle path. Yeah.
Yes.
So, Ritesh, in this context, what do you, let's say, if an Indian individual would come to you right now with a 5 year horizon in mind of investments, and even though you would suggest him to put not more than 5-10% of his money into your fund, which is, let's say, assuming 100% of his global exposure. And if he comes to you and says that, please, with your kind of expertise, advise me on the other 90%, what is that you would advise that person to do?
Okay. So one, India's high yield environment is doing very well. High yield on the fixed income side, there are fantastic paper available at a reasonably good yield.
Corporate bonds.
Yes. There are a couple of them which has come and which were picked up by global investors also. They've opened this market. Keep an eye on that thing.
Any specific names? These couple of ones which you could mention.
Like Shapoorji Pallonji came just now, okay? A name which came over there. Very good collaterals and all. I talked to some global investors why they bought into it. Okay, and they were quite happy with the way that transaction was structured. It was happening for the first time, but you will see that this market will open, and this market will not go to banks. Market will go to wealth managers, HNIs. So your wealth manager should be able to offer these things to you.
Source these bonds for you.
Yes. Secondly, I believe, forget next 3-6 months, money will be made in mid caps. Our indices are made up of services companies. Service was becoming a big part of the benchmarks. It had to become a big part of the benchmarks, and that's how it, services are, people have invested in services. Going forward, I believe that the money will move from services to manufacturing. It will create new millionaires in the manufacturing in tier 2, tier 3 cities, which will also lead to real estate boom in tier 2, tier 3 cities at the expense of metros, including Delhi, Bombay, Calcutta, Madras, which will just flatten out. Already flattening out for some time, it will flatten out. So keeping that euphoria aside, okay, of mid cap, which is happening now, I will for the next 5 years invest in Indian mid caps. Forget large caps. Because
and small caps also, mid and small caps. Okay.
But for small caps, you need to give money to a good
manager.
Fund manager. An investor should not be doing small cap himself. You should be giving it to a good fund manager.
Fair enough.
EMS, fund manager, I don't care. Mid caps are generally more, people are more aware about it. There is a lot more information in the public domain about it. Maybe your risk levels are lower, but for small caps, your risk levels are very, very high.
And the good thing is mid caps itself, the sizes have gone up now. So they are
And
well-known names on the mid cap side.
Absolutely. Plus large caps, why give money to fund manager? Give it to the index fund. Which are beating, right? As economy matures, large caps actually, do not beat the benchmarks.
Already happening right now.
Right. At 12% let me put it this way, at 7-8% nominal GDP, I will stay with large caps. At 12 to 15% nominal GDP, I would prefer to go with mid cap and small cap. So if the next 5 years for me is 12% nominal GDP, then there is no doubt in my mind that mid caps and possibly select small caps will outperform large caps. It is how the economy is structuring.
Right.
Macro is deciding the micro.
Yeah, of course. So to summarize, of course, though you have mentioned this, so 3 of the biggest macro trends that you see globally that will shape the destiny of the global financial markets in this decade.
So one is the oil. I believe there have been a massive underinvestments in oil and gas capex. And in any cycle, when the price rises in the first 2 years, money starts moving into capex. But what is happening is capex is not happening, M&A is happening. Okay, so you will see oil and gas. Secondly, de-dollarization will become a big thing. It is not as of now, it is a fad as of now. And the world will be divided into small, different groups. Okay, so you need to be able to see that how these groups, okay, will be, or which group will be the one which will be the best performing group going forward. Can it be the Latin America? Can it be the Southeast Asia? Can it be India as one country? Okay. Over the next 1-2 years, how the policy makers, navigate these waters will decide the fate of these groups, which one will do better over the next 6, 7, 8 years. But demographics is telling me that Latin America and possibly Southeast Asia, led by India, will be the best performing groups.
Anything on the technology that you feel? Because that's something which a lot of people ask.
I have no understanding.
Okay. And on the energy side, don't you think that new modes of energy like solar or whatever will disrupt?
They're 5 years away. So you want to transition very fast. So you want to transition from fossil fuel. I understand that. And for whatever reason you want to do it. You're transitioning very fast without creating the capacities on the other side, whether it is hydrogen, electricity, solar or wind. You're just not ready for that transition as of now. That's why you are seeing that coal is again coming back in China, Germany and India, right?
India also, yeah.
Because we are trying to do something very, very fast.
Yeah, so the fact is that, so you're trying to say is that we expected this to happen very soon, but it's not happening. It'll happen maybe 7-10 years down the line, and because we expected it, we stopped doing anything on the supply side of these things. So
Yes, and
there'll be a big rise in the prices of these things before they completely go bust.
the more prices rise, the more money will go for alternate energies.
More, yeah. I think
It
that
will
will be
bring
the.
its own demise.
So there'll be a big bubble
$150
which
oil.
will happen before
Yes,
its death. That will happen. जो वो
yes.
हिंदी में बोलते हैं ना
$150
मरने
oil
के
will bring
पहले
its
वो
own demise.
हाँ ठीक है okay fine. Last 2-3 questions, Ritesh. One is for an individual investor, what you've someone who's excellent at one of the best people to see data, etc. So what do you suggest these people to read, and what's your go-to place for reading or absorbing information?
So, I read a lot of books. There are few Twitter handles I follow because there's excellent information on Twitter if you know whom to follow. Podcasts, there are a lot of free podcasts out over there. And I actually write a bi-weekly for PineTree, which you can subscribe. And I do have some newsletters.
And where can we subscribe? On PineTree's website.
On PineTree's website, yeah. And I put it on my LinkedIn every bi-weekly. I put it once. I send it to investors. Once I send it to subscribers, I also put it on my LinkedIn. So you can subscribe it on my clicking on that thing, and just through LinkedIn you can just.
And there is no price
No.
or anything.
No.
Okay.
So I've realized that if you're a macro investor, then you don't require any Bloomberg or any other costly subscription. I'm not getting into the stock picking. I'm just getting it as a macro investor. You don't require any costly subscription, but you need to curate your Twitter feed. You need to read a lot. You need to listen to a lot of podcasts. There is a lot of good free stuff out over there. Now coming to what books which I would suggest everybody, I say just pick up Avoiding the Punch by Louis Gave of Gave Carl. It's a fantastic one. And then there are very low cost subscriptions like Grant Williams podcast. This is $100 a year, but you will learn a lot. And one which is a must read for me every weekend is Luke Gromen newsletter. Both these things, Grant Williams and Luke Gromen, is behind paywall.
Okay. Yeah, but worth it, as you said. And what's your favorite book of all time? Like one book, if you were to say that this is a must read for everybody.
The Bankers Who Broke the World.
Okay. Okay, that's good. And any movie, both finance and non-finance related?
Yeah, there are a lot of finance related, but I don't know.
Kuch bhi aap, anything, any one which you would like to pick.
This one I was watching just now, the same one again, the one which was about the Lehman fiasco. Okay.
Big Short?
Michael Burry, yeah. The Big Short.
Big Short, yeah.
Every time you watch it, you learn something new.
Mm. And your favorite movie and song?
I don't even remember actually.
कुछ तो होगा आपके मन में.
I don't watch TV anymore.
अच्छा, you don't watch any
Maybe
series?
On songs, yeah, some songs it is that the T series mixtape is really good in Hindi. It's really
अच्छा,
good.
okay. And any series that you love in the recent past?
I don't remember also.
अच्छा, ठीक.
I watched
We'll
once
maybe
in a while, but I don't
pick you
remember.
this. We'll pick this up on our Twitter
Yeah,
Spaces.
yeah.
So thank you, Ritesh. Anything else you would like to add? But trust me, over the last 8 months that we've been doing this, there are very few people who speak their minds out the way you've spoken, and thankfully we've had a variety of speakers of different kinds who have had very different ways to express themselves, but we've not had anyone with the macro and global view that you've had. And I think this will be super helpful for all our viewers and listeners also. Anything else would you like to add to close off your final closing comments?
No, thank you for allowing me to speak my mind.
Thank you so much.
Have a good day.